All right, let's talk about day trading for a living. And I mean really for a living. We're going to skip all the hype you see online about getting rich overnight. This is about building a real, sustainable career. So we're going to break down the professional's playbook, what you actually need to know from the mindset and the tools, all the way to the daily discipline that makes or breaks a trader.
You know, they say knowledge is power, but in this world, it's literally money. And that quote just nails it, right? It's not about luck, it's not about a hot tip, it's about knowing your stuff, having a deep, practical understanding of how the market works, and then turning that knowledge directly into cash.
All right, so first things first, let's talk about the dream versus the reality. Look, I get it. The idea of financial freedom is what pulls a lot of people into trading, but it is so important to get a reality check before you even think about putting your money on the line.
So, what's the expectation? You're jet-setting around the world after a month, right? Yeah, not quite. The reality? You're looking at 6 months, maybe even longer, of grinding it out just to start seeing consistent profits. This isn't a lottery ticket, folks. It's a real business you have to build from scratch. So let's be super clear on what we're even talking about here. What is day trading? Simple. You're in a trade and you're out of that same trade, all within the same day. We're not talking about long-term investing, buying Apple stock and holding it for 10 years. Nope. This is all about cashing in on tiny little price wiggles that can happen in just a few minutes or even seconds. And this is maybe the most important mindset shift you have to make. You have to treat this like a business, not a hobby. If you think you can just dip in for 10 minutes here and there, you're gonna lose money, period. It's a serious business and it demands your time, your energy, and of course, your capital.
Okay, so you've got the business mindset. Awesome. What's next? Well, now we need to build your trader's toolkit. Think of these as the absolute must-haves, the foundational pieces you need before you even dream of placing a trade. There are 3 essentials here, 3 non-negotiables. First, you need a broker. This is the company that gives you access to the stock market. And for day trading, speed is everything. So you're going to want what's called a direct access broker. Second, you need a trading platform. That's just the software you use to actually place your orders. And third, scanners. Oh man, these are a lifesaver. They're programs that automatically hunt for stocks that fit your specific criteria. They do all the heavy lifting for you. Now, getting to your first real trade, it's a step-by-step process. And listen, you cannot skip any of these steps. It all starts with education. You've got to read the books, maybe take some courses, find a mentor if you can. Then comes the most crucial part, practice. You've got to use a simulator. It's like a flight simulator for pilots. You're trading with fake money so you can crash and burn as much as you need to without losing a single real dollar. Only after you've proven you can fly that plane in the simulator do you get to go live. So how long do you stay in the simulator? At a minimum, 3 months. Yep, 3 full months. That means you're practicing every single day with fake money to hammer out your strategy, to really understand your own psychology, and to prove to yourself that you can actually be profitable. You got to do that before you risk any of your hard-earned cash. All right, let's say you've done your homework, you've put in your simulator time, now what? Well, now you need a strategy, a real plan. So let's dive into 2 classic beginner-friendly strategies just so you can see what a trading plan actually looks and feels like. First up, we've got the ABCD pattern. It's a real classic, all about trading a stock's momentum. Then we'll check out something called the opening range breakout, or ORB for short. That one's all about taking advantage of that initial burst of action right when the market opens for the day. Okay, so the ABCD pattern, let's break this down. You're watching a stock and you see it shoot up. That's the move from A to B. Then it pulls back a little bit to point C. Now, why does it do that? Well, it's usually the early buyers taking some profit. But the key is that point C is still higher than where the whole move started at A. That point C, that's your sweet spot. That's where you want to buy. You set your stop loss, your safety net, right below C. Then, as the stock rallies to a new high, point D, you sell half your position to lock in some profit. And here's the clever part. You move your stop loss on the rest of your shares up to your original entry price. Boom. Now you've got a risk-free trade. Next up, the opening range breakout. This one's a bit more straightforward. You just watch a stock for the first, say, 5 to 30 minutes of the trading day. You mark the highest price and the lowest price it hits in that window. Now, if the stock breaks above that high, you buy. That's called going long. If it breaks below that low, you short it, which is basically betting that the price is going to drop. And where's your stop loss?
You place it relative to the VWAP line. VWAP just stands for volume-weighted average price. Just think of it as a really important line on your chart that tells you the true average price based on all the trading happening.
Okay, so knowing a strategy is one thing, but actually executing it with discipline day after day, that's a whole other ballgame. And that's what this next part is all about, the daily process. This is what really separates the pros from the amateurs.
So a pro's trading day doesn't start at 9:30 a.m. when the market opens. No way. It starts hours before. By 7:30, you're at your desk, you're focused, you're ready. By 8 o'clock, you're already building your watch list, finding the stocks that might be in play. By 9:15, you've whittled that big list down to just your top 2 or 3 contenders. See, when that opening bell rings at 9:30, you're not trying to figure things out. You're just executing a plan you've been carefully building all morning.
So what exactly makes a stock in play? Well, you're looking for a few key things. First, there has to be a reason for it to move. Some news, an earnings report, something. We call that a catalyst. Second, it's got to have high volume before the market even opens. Lots of people are already interested. It should have also gapped up or down, meaning its price is already way different from yesterday's close. And finally, you want something that has a history of moving, a high average daily volume and a good ATR, which stands for average true range. That just tells you the stock tends to have a decent price swing each.
And for every single stock on that final shortlist, you create a very specific game plan. It's really just a series of if-then statements. Super simple. If the stock breaks this price, then I will buy. If it hits my profit target, then I will sell. If it drops to my stop loss, then I will get out. Doing this ahead of time takes all the emotion out of it. When things are moving fast, you're not guessing, you're not panicking, you're just following the script you already wrote for yourself. Okay, we've gone over the tools, a couple of strategies, the daily process. But honestly, none of that matters without this last and most critical piece of the puzzle, mastering your risk and your own mind. This is it. This is what will determine whether you actually survive in this game long term.
Rule number 1 of risk management. You should only ever take a trade where your potential profit is at least double your potential loss, a 2-to-1 ratio. So if you're risking $50 on a trade, you need to have a realistic chance of making at least 100. This is huge because it means you can actually be wrong more than you're right and still make money. Think about that. And here is your absolute lifeline. This rule will save you. Never, ever, ever risk more than 2% of your entire account on one single trade. Why? Because this is how you protect your capital. It guarantees that one bad trade or even a string of bad trades can't just wipe you out. It keeps you in the game, and you have to be in the game to win.
This might sound a little weird, but this is the biggest mental hack in trading. You have to stop focusing on making money. Seriously. The profit, that's just the byproduct. Your real job, your only goal, should be to execute your process perfectly. Did you find the right stock? Did you make a solid plan? Did you follow that plan without hesitating? You focus on mastering that process, and I promise you, the money will follow. So, it all boils down to this, the professional trader's mindset. It means you're disciplined, not emotional. It means you stick to your plan, no matter what your gut is screaming at you. It means you take a small loss without a second thought, because you know it prevents a giant one. And, maybe most importantly, it means taking care of yourself. Your physical and mental fitness are your biggest assets in a job this demanding. So there you have it. That's the playbook. The process is clear. The rules are pretty simple, right? But the discipline? Well, that's the hard part, and that's the part no one can teach you. So the final question is for you. Are you ready to stop treating the market like a casino and start treating it like a business?